Welcome to another Webinar Wednesday. My name is Mark Morell and I'll be your host for today's discussion, where we will be focusing on recent budgetary reforms and legislative changes in Mauritius. We are excited to explore how these measures are reshaping the tax landscape, enhancing workforce dynamics, and boosting the financial services sector. Joining me today, our panel of experts, the Director of the MRA, Mr. Mahmad Noor Oozeer, Mr. Nicolas, the Managing Partner of Juristconsult Chambers, the CEO of Mauritius Finance, Mr. Samade, Jhummun, and from DTOS Group, the Head of Tax Advisory, Mr. Hannelas. Thank you so much for joining us, guys. All right, before we get into the questions, just a bit of housekeeping for all of you at home. If for some reason you're struggling with this platform Demio and it's not working very well for you, then please go and join the conversation now on our Facebook page. It is streaming live. We will be doing a curated Q&A session at the end, so please feel free to send through your questions and to whom you're addressing those questions to. And finally, we have a document highlighting the key points in the Finance Act available for you to download at any time as it's pinned in the chat box. So feel free to give us a wave in the chat section and give all your other friends and other people who've joined us a wave. And let's get started. Let's get into it. All right, first question. Mario, with the new progressive income tax system set to reduce the tax burden for all taxpayers, what are the significant impacts we can expect? And are there any potential challenges that might arise in this practice?
Thanks, Mark, for your question. And good morning, everybody who's watching us. I would say that this reform is welcome by everybody because the former system was not good. Although there were three different rates, 10%, 12.5% and 15%. There were a lot of anomalies and distortion. To give you an example, somebody earning, let's say, 701 rupees per year were left with less disposable income than someone earning 700,000 rupees per year. And it was a similar situation there. There was a distortion. It was a similar situation for those earning more than 975,000 rupees per year. They just, if they get 1 rupee additional, they go on 15% on all their income. So they get their take-home pay was less than someone earning less because they were on the 12.5. So it's good to have this progressive system. And personally, I am for a pure progressive system in terms of equitable. It's more equitable. People that have more means pay more. But I don't think that we could have end up with the same result. The 11 bands for me is too many bands. It creates some complexities, especially for small businesses employing people. It create some complexities in, let's say, an expatriate get into Mauritius and he wants his employer to pay his tax. You know, on this question, there is a tax on tax, a benefit, a fringe benefit. So there's a lot of complexities to calculate. Fortunately, we have the tax calculator and some software which can help for the calculation. For those who the rate of which goes above 15%, there is an issue because company normally they pay tax at 15% plus 2% CSR. There will be an issue for individual, let's say sole traders or société, partnership, because if you are in partnership and you are earning a lot of income, I don't think you would like to pay 22% compared with 17% when you are trading within a company. So there will be some arbitrage. I'm sure there will be some tax planning made. So I personally would have thought that it would have been better to have a 17% maximum. The issue also concerns those who are non-resident, let's say, non-resident when they come to Mauritius. Now, on the first ban of 90,000 rupees, they will not pay tax, but this will not be applicable for directors, non-resident directors. I think on the directors' fees, there will be a tax of 15%, but non-resident earning, let's say formally, if they earn Mauritian source income, they were not paying solidarity levy, and they were paying 15% maximum. Now, a portion of their income may be taxed at more than 15%, because the maximum is 20%. So this there may be some issues, but overall, I think that the progressive tax rate has been most welcomed by everybody. So everybody will pay less tax than before.
Okay, all right. We're all paying less tax. That sounds great. Nicolas, I've got a question for you. Mauritius is taking steps to make the island more attractive for foreigners. Are these measures sufficient to draw in a larger international workforce?
Thank you for your question, Mark. At Juristconsult, we often advise companies that employ foreigners or companies that have been set up by foreigners. And as mentioned by Mario previously, based on my discussions with them, I believe that the new progressive tax system is one of the most welcome measures when looking at it from a foreign employee perspective. Okay. And it's true that, as demonstrated by several experts, the effective tax rate could be as high as 40%. I speak under the correction of Mario. And this was even more than countries like Singapore or France. And this would have been maybe one of the reasons for them to move to other jurisdictions. We work a lot in the financial services sector. And in this sector, the highly qualified professionals can work from almost anywhere. And it is crucial for Mauritius to maintain an efficient and effective tax structure to be able to retain and attract these professionals. In addition to that, we must look at the question of the cost of doing business, which is also on the rise in the Mauritius jurisdiction, and efforts must be made in that area as well. Coming back more specifically to some measures which are there to ease foreign workers to come to Mauritius, I would mention the reduction of the salary threshold for occupation permit as professional, which has been reduced to 30,000 rupees per month. There is also the criteria for occupation permit applicable to self-employed, which now only requires an initial investment of 35,000 USD. One other innovative measure, which does not really concern the financial services sector, but maybe other sectors, is that concerns work permit. We all know that the application time to process a work permit was much more lengthier than the one to process an occupation permit through the EDB. Now the minister has introduced a measure in the sense that if you submit an application for a work permit and you don't get an answer within 4 weeks, then the work permit would be deemed to have been granted. That's putting the onus on the public officers to deal with the file in a more efficient and quick manner. Some other measures which have been introduced are not contained in the law, but there have been some changes in policy to attract more foreign workers. One of them, I would say, is the abolition of the ratio from local to foreign workers in some sectors, such as the construction sector, the manufacturing sector, or the agricultural sector. But the ratio has still been maintained in some other sectors, such as tourism and ICT. In that case, as we all know, some employers were having great difficulties in finding employees to work in certain specific sectors. I remember back in the days when the seafood hub sector was starting, the operators were having very, very tough difficulties in finding employees to work on the night shift system because they were working 24/7, and they couldn't find any Mauritian who was willing to work overnight. Yeah. So they had to import workers from other countries. But in any event, the government will need to assess in a few months' time whether this has any detrimental effect on the local workforce and preventing local workers from having access to the market. So it's an ongoing exercise, I would say. To summarize, to attract more foreign workers, as we said, the new tax system is a positive step towards that. But I think that we need to come forward with a whole ecosystem to attract these foreigners, and so that they can benefit from the same standards of living that they had in the country of origin, be it in terms of education for their kids, be it in terms of health facilities, and so on. So in addition to the financial element, we must look at it from a global perspective.
Okay, right, so we've got to approach it from a global perspective. The next question is for Samade. How will the legislative changes impact the financial services sector, particularly with the revised partial exemption regime for collective investment schemes and closed-end funds?
Thank you, Mark. Before just taking this question now, maybe bounce back on what has been said on the occupation permit. There are two other things that was announced and implemented recently, which is going to help. It's in relation to foreign students who are studying in Mauritius. As you're aware, we have several international universities now in Mauritius, and many of them, we have students from all over Africa and India and other countries who are coming to study in Mauritius. After the 3 years of study, they are now allowed to work in Mauritius under the Young Occupation Permit, which is something going to boost the different sectors where foreign students can come and join the market. That's one.
Sorry, how long is that permit for?
This is for 3 years under the Young Professional Work Permit, but then after the 3 years, you can take advantage of the occupation permit that has been reduced from 60 to 30,000 rupees, so you can end up staying here for 10 years plus. So that's the opportunity. And we are an aging population. This is one way to attract new talent in the industry. Yeah. Now, the second part also is there has been changes recently on what we call the diaspora scheme. So the diaspora scheme, attracting Mauritians who are outside of Mauritius, having worked for some years, can now come back on a tax holiday for a minimum of 5 years. So there are different categories. I think the rules has been recently published, and this is something that you need to look into, how we can attract those issue of brain drain that we had in the past to get some of them back in the country. Now, coming back to your questions in relation to the amendments that was brought in the Finance Act regarding the partial exemption on interest income received by a CIS scheme in relation to interest. This has moved from 80% to 95%. I think that one of the reasons for it is today we have a number of funds set up in Mauritius, and most of them has been investing into securities, equity, derivatives, but we've seen very few debt funds. And we've noticed that in across the world, including Africa, Asia, India, there's a huge demand for infrastructure. If you look at Africa, there's a 1.4 billion population. There's always increasing demand for infrastructure, whether it's energy, whether it's hospital, school, you just name it, it's all there. Likewise, if you go to India today, it's a $3.5 trillion economy. The aspiration is to become a $5 trillion economy in the years to come. And for that, they would need huge demand of infrastructure. And most of them is going to be financed through debt. So through this amendment that we brought in, today we have one of the most competitive jurisdiction in terms of interest income on debt instrument. So this will encourage more debt fund to be set up in Mauritius, whether it's for Africa, whether it's for India, whether it's for other jurisdiction, especially when you see in today's world, many of these projects has got what we call the ESG mandate in them. So this is something that's going to grow, and we want to promote that as well, and because we're a country that is being affected by the climate change, and we want to be part of it. And this is one of the reasons we brought these changes. And today, if you look at it, Mauritius has got one of the best treatment in terms of withholding tax with all treaty partners that India have. Yeah. So when you add on top of that with a partial exemption of 95%, it is an effective rate of less than 1%. So it makes it very compelling for promoters and fund managers to consider Mauritius for fund jurisdiction. So through these changes, we have to do a consequential amendment in our Securities Act to ensure that funds can invest into debt. But through these changes, we've also included money market instrument. So this opened the door for funds investing in money market can also use Mauritius and take advantage of this new tax regime for interest within a CIS scheme.
Okay, great. Thank you so much. Mahmad, I've got a question for you. How will the treatment of sub-funds under the variable capital company scheme work in practice, considering their independent liability for tax recovery?
So thank you, Mark, and good afternoon, everybody. So you will recall that the VCC Act was introduced last year, and in this piece of legislation, the variable capital company were given the option to elect to present separate financial statements with respect to each of its sub-funds and SPVs. So when we talk about presenting financial statements separately, it also involves filing separate tax returns. It also involves having separate tax liabilities. And again, when we talk about separate tax liabilities, there comes the question of recovery. And when the question of recovery comes forward, means that recovery, if nothing is done, could be made from other cells. And for these other, I say cells because it also applies for the PCCs, right? So the investors in these other sub-funds won't be happy about that. So there is something that needs to be done to protect the other investors so that each sub-fund and each SPV bears the liability of its own tax liability, right? So this is why there has been a change in the, brought it by the Finance Act to the Income Tax Act, limiting the powers of the Director General for tax recovery whenever there has been an election under the VCC Act, or in the case of PCCs under the Companies Act, to present separate financial statements and to be taxed separately. So in these cases, whenever there is a liability for a SPV or a special fund or even a PCC, the Director General cannot recover that liability from the assets of another fund, giving the investors of all the funds the certainty and the comfort that their assets won't be used for other cells. Okay. So, in short, it gives the investors security and comfort.
Yeah, comfort and peace of mind. Nicolas, let's go back to you. Amendments to the Workers' Rights Act aim to bolster the local workforce. Could you highlight the key changes and how they align with retaining local talents and reducing the brain drain?
Thank you, Mark. I think that before looking at the amendments to the Workers' Rights Act, we need to acknowledge that in recent years, there have been several amendments and several regulations which are the effect of better protecting the employees and giving the employees better working conditions. I would mention, for instance, the work from home, the flexi time, or even the very stringent conditions in case of redundancy. So if we look at the measures, at the amendments to the Workers' Rights Act that have been brought into play by the coming into operation of the Finance Act, one of these measures which is attracting quite a lot of attention is the 4-day week. Yeah. In fact, the formula that Mauritius has adopted requires the worker to still work 45 hours per week, but in 4 days. This is different to the model that has been implemented in other countries. We also need to note that this was incorporated in our law without any testing period or pilot phase. Yeah. So we don't really know how it will be implemented in practice, and it may give rise to certain practical issues, and it may not be so relevant for some sectors. Maybe in the services sectors, it can be more difficult to put in place than in the others. And coming back to this issue of having to work 45 hours per week, but in 4 days, it's different to, for instance, the model that Sweden has adopted. In those countries, you get 100% of the remuneration for 80% of the work done with 100% effectiveness or productivity. But I don't think Mauritius can afford to put in place a system like that currently. We don't have the same wealth as these Nordic countries, so we need to find our own model. But what it means in practice is that employees will need to do longer hours. So 45 divided by 4 would mean like 11.2 hours per day. One of the reasons for bringing forward this measure was that it would give more time to employees, to workers, to spend with their family. But at the same time, if you're required to work longer hours, that means that you're spending a lot of more time at the office, and you'll have issues like just picking up your kids from childcare on a daily basis if you are finishing at 7 o'clock at night or 8 o'clock. So in practice, we need to see whether there will be a lot of employees who will be opting for this 4-day week. In addition to that, I would say one of the other measures which goes towards protection of the employees would be the accumulation of annual leaves. So if a worker does not take his annual leaves, he can request his employer in writing that the leaves not taken or not granted be accumulated. The issue is that there is no limit to that accumulation right now in the law. So if, for instance, we take an extreme example, you know, in Mauritius, some employees, they tend to consider sick leave as annual leave. And if you only take half of your annual leave on a yearly basis, this means that after 5 years, you would be entitled to more than 50 accumulated leaves, and after 10 years, more than 100 accumulated leaves. So I think the minister will need to come with some regulations or some precisions regarding this accumulation of leave. Okay. I think another measure which is worthwhile mentioning is the obligation for an employer who has more than 250 employees to provide for childcare facilities at the workplace or within 1 kilometer from the workplace. Yeah, the intention, I think, is really good, but as mentioned by the leader of the opposition in Parliament, there may be some practical issues. If you consider employers that have branches or outlets spread all over the island, and with the requirement to have the childcare facilities at the workplace or within 1 kilometer, does that mean that they will need to have like 20 childcare facilities almost everywhere? Once again, the minister has said that they would come forward with some regulations to give some clarity on these issues. As we can see, all these measures go towards a better protection of the employees, but will that be sufficient to reduce the brain drain? I don't think this is the case. If you look at young professionals who are leaving Mauritius to go to other countries, such as Luxembourg and so on, most of them, their aspiration would be maybe to acquire an immovable property or buy a nice car. And given the size of the island and the price of property in the country, it's very difficult for young professionals to be able to acquire the same. So instead of maybe, I think the solution lies with all the players, be it in the industry, in the government. So everybody, I think, needs to think what can be done. For instance, the government has put in place some tax refund in case of first-time buyers recently, speaking under the correction of Mr. Oozeer. But that's not enough. When you look at banks are making huge profit on a yearly basis, and I think they could come up with truly reduced interest rates for first-time buyers. And this would help the young graduates to acquire property and get their independence when they start working. In addition to banks, maybe we could look also at property developers, and they could allocate a percentage of all their new developments to first-time buyers for a specific period. This would also help in that field. And a comprehensive and global approach would lead to Mauritius being a more attractive jurisdiction to retain the young professionals, to attract foreigners, and also the Mauritian from the diaspora, as mentioned by Samade earlier. There are a lot of Mauritians outside, and the diaspora scheme would certainly help. But we need all this environment, as I mentioned before, in terms of education, health facilities, and even cultural events that need to be available to them.
There's definitely some challenges with all of that. I mean, you're talking about the 4-day work week and what that looks like compared to other countries. That's a serious challenge, particularly that when you consider public transport and that comes to an end at a certain time of the day, that could be very challenging for employers as well. So thanks for that, Nicolas. Let's go back to Samade. Does Mauritius have a competitive advantage over other jurisdictions like the Netherlands, Singapore, and Gift City in terms of providing a conducive environment for fund structures?
Mauritius has been known for fund structures for over the years, and we have approximately 1,000 plus funds which are set up in Mauritius at the moment, targeting different countries, Africa, Asia, India, or elsewhere. So we have been around as a MIFC for 30 years now, and any promoters or investors, when they're looking at a jurisdiction to set up for the investment, they tend to look for a place which has been tried and tested. And having been there for 30 years, this is what we bring to promoters and investors. And it shows also the certainty and predictability that you can get as an investors coming in. You don't want to go in a place where maybe 5 years down the line the law gets changed, and then you have already promised a return to your investors, and you don't be able to deliver on that. So that's one thing. And secondly, when you look at where we are today, we have been having a lot of unique advantages to certain countries while setting up in Mauritius. This is not the case anymore. However, what we've done is we have acquired certain skills and services that we've provided to our clients. So despite the amendment that we've seen, especially Mauritius has been contributing a lot of FDIs or FPI into India, but the law has been amended and we have changed our treaty a few years back with a new protocol in place. But despite these changes, we've still seen promoters, fund managers continue to use Mauritius to go into India, but also outside in other jurisdictions. So it's also in relation to what we call the service level, and when you look at it in terms of ease of doing business and cost of doing business. Today, Mauritius, over and above the 1,000 funds, we are acting as administrator for funds across all jurisdictions, being Luxembourg, Cayman, Guernsey, Jersey, almost all jurisdictions. We have team of administrators working from Mauritius for several multinationals. So that gives you an indication also why they are here, is the cost of doing business which come and support. But having said that, is we continue as a jurisdiction to increase our offering. It was mentioned earlier the VCC. Our VCC in Mauritius, which was introduced last year, is a very unique product. It's unique in terms of features. You can't compare it with whatever else you have outside of Mauritius or in the world. Especially when you look at the VCC today, each sub-fund or SPV has what we call a separate legal personality. Hence the reason MRA has come with these changes where you can't go and claim your tax liability against another seller. That brings a proper ring fencing for the investors, which know that the assets are secured. Now, within a VCC, a promoter, once they've set up a fund, it allows them to go to the market quicker, and in terms of cost, it's a lot cheaper because the fees for the second fund, third fund is cheaper than setting up a new fund in another jurisdiction. Yeah. The fact that the promoters, the parties are already known to the regulator, already known to the banks, you can take a fund to market within 2-3 weeks, which nowhere else you'll be able to do that. And the cost also is a lot lower compared to other jurisdictions. So I think today, if you look at it, we're still very competitive. Obviously, it's an open market. There's a lot of competitions out there. But if you compare to what's happening in Africa, I can tell you today, I think more than 60% of the DFI's money investing in Africa are actually structured through Mauritius. Because when it comes to investing into Africa, tax has nothing to do with it. It's used as a risk mitigating platform. And this is what we bring to investors. You have a risk mitigating platform, while at the same time providing a range of quality services at a very low cost and providing the comfort to investors.
Fantastic. Thank you so much. For those of you online, watching online, we're only a couple of questions away from our curated Q&A. So if you have any questions you'd like to ask any one of our panelists, then please put it in the chat box now so we can ask the questions during our session. Let's come back to Mahmad. Tax arrears settlement scheme. We've seen the success of TAS in boosting tax collection. Can you elaborate on the mechanism for tax collection under TAS and whether voluntary disclosures will be accommodated?
Okay, thank you, Mark. Yeah, you are perfectly right. The tax arrears settlement scheme was in fact introduced in 2021 following the economic downturn relating to the COVID pandemic, where economic operators could not work or could not get the income they planned. But having said so, they had the obligation to continue to pay for their arrears of tax that were outstanding. So government came up with the arrears settlement scheme, which is a scheme where if the tax is paid within a certain period of time, the full amount of the penalties and interest are waived, which means that it gives the operator, the debtor, a way out to settle his tax debts. And because of the success of the scheme, it was reintroduced in 2022 and again reintroduced in 2023. I can tell you that last year, that is for the 2022 scheme, the MRA has recovered nearly 1 billion rupees with respect to payment of arrears under the TAS scheme. So with this type of success, government has reintroduced the scheme. And of course, the procedure that has been put in place by the MRA to facilitate the debtors to join the scheme, we have now on our website, the platform, a facility to apply and join the scheme. And once a debtor has joined the scheme, we'll approve it and give the debtor the facility either to pay by installments, or if the debtor is willing to pay the whole amount at one go, then the full amount of the interest and penalties are waived, right? But there are certain conditions that need to be complied with. We have got, first of all, the deadline to make the application, which is in fact 31st of December. But because 31st of December, I think, is a Sunday, so then the deadline will be the next working day, which is the 3rd of January 2024. Okay. But the last date for payment is 31st of March 2024. And again, 31st of March 2024 being a public holiday, so the deadline is the 1st of April. But we should keep in mind that this facility, this scheme is not open to those taxpayers who have been subject to, who have been found guilty of offenses under the POCA or terrorism, POTA, or drug trafficking. So this is not, it is restricted to those who have been doing the right thing. Now, as regard the second part of your question, this is not like a voluntary disclosure scheme, right? It applies to taxpayers who owes tax. As at the date of the budget speech, it was, I think, 2nd of June, 2023, and it will apply only to those taxpayers who had a debt as at that date, right? As at that date. And it won't apply for those who wants to make a voluntary disclosure for under declaration of tax or profit and so on. But then if there is anybody who wants to voluntarily come forward to declare under declared tax, they will have to go through the normal process. It's not under the scheme. The normal process is you go to our website, you file your amended returns, and you effect payment of any tax that has been underpaid.
Okay.
That's it. Thank you.
All right, great. So let's get into the e-invoicing system. So as the MRA introduces the e-invoicing system, how can it mitigate tax declaration errors, and what other benefits might arise from the system?
So the e-invoicing system is something new for us, right? But we have been talking about it for a long time now, and I want to inform everybody that this is a system that has been put in place in many countries, and it has been successful, and there are a lot of advantages associated with the e-invoicing system. I will try to explain how it works. Now, every operator, economic operator, will have to join the system and have what we call their EPS. Let me look at my paper because of the terms. The terms are a bit complex. The EBS is the electronic billing solution that every operator normally will use, and by the system will generate the invoice, and that invoice will be transmitted to the MRA for fiscalization. Fiscalization means that it will be given a unique reference and sent back instantly to the operator. This will be done through a platform that we call the invoice fiscalization platform that will fiscalize the invoice. This is a system that has been put in place in many countries, and once the operator receives the fiscalized invoice, it can be delivered to the client. Right? Now, about the advantages, yes, there are many advantages, I mean, for the client itself, for the operator, because one of the main advantages is that the operator will no more be required to keep paper invoices, because copies of invoices are now electronic. It's in a system, and there is no need to keep paper invoices because this is very cumbersome, and it's a cost to the operator. It also provides a level playing field between different operators, because we know that when invoices are done manually, it's not always that the sales or the invoices find their way to the final accounts of the company. So when it is on an e-invoicing platform, it is transmitted to the tax administration instantly, and of course the operator will have to account for it, and the audit as well becomes very easy, because once an operator joins the system, it's easy for the MRA to verify whether all the invoices issued are on the system and are being received by the MRA. The audit becomes easier, and if everybody records all the invoices issued, it means that there is more equity, there is more level playing field between different operators. More importantly is that when the system will be up and running, will be fully up and running for all VAT registered persons, for example, the VAT return itself could be pre-filled, because the output tax will be known by the tax administration, and being given that the output tax is known, and that output tax is probably an input tax for another operator. So for the other operator, the input tax will be known, and it may be that this information is being used to pre-fill the tax returns, giving facilities to the operator. Okay. Additionally, for the MRA, we think that this will improve record keeping, because in the present system, keeping records is sometimes, difficult, it's cumbersome for the small operators or even for the medium operators. And with a e-invoicing system, all the invoices will be recorded, the sales will be recorded, the VAT collected will be recorded, the input tax will be on record, and we think that this will improve the record keeping of the businesses. There is also the question of compliance. In all countries where e-invoicing has been introduced, we have seen an increase in the collection of VAT. And hopefully, with the introduction of the e-invoicing system, we forecast that there will be an increase in the collection of VAT, which is good for the government. And finally, for the general public, I mean, there will be like a standard receipt. All the receipt, after having been fiscalized, will have what we call the QR code with the unique identification number or the unique identification of the fiscal invoice, and being given that the public will now be able to know whether the VAT that has been paid by the public has been properly declared by the operator and collected by government, and will give the public like the comfort that the VAT that he has been paying has properly been paid to the authority. Yeah. And of course, there is the environment impact as well, because just think about the number of paper invoices that are being issued throughout the country. Yeah. And when we talk about, at the start, we'll target the VAT-registered operators. And when we talk about VAT-registered operators, just imagine the number of invoices that are printed every day and are exchanged every day, and probably there will be a positive environmental impact.
I think that's a great step forward. Just think about the amount of physical checks that are written as well, we've got to save on those. All right, Mario, last question for you. The removal of the solidarity levy has sparked discussions about equitable contribution in challenging economic times. What's your perspective on this issue?
Thanks, Mark, for your question. But before responding to this question, allow me to go back to a question which you asked Mahmad about the tax area settlement system. I think Mahmad said that this will apply only for assessments which were raised before a certain date, I think 2nd June, if I'm not mistaken. But I would appeal to MRA if they can also consider those assessments which were issued after that date. You know why? Because the assessment, let's say somebody has received the assessment before or after that date, is depend not on that person, but on the MRA when they select their cases for audit and all that. So I think that an appeal which I would make on behalf of those taxpayers who have arrears after that date, I think if they want to pay to collaborate, and you asked also about the voluntary disclosure, I think that this also can be taken into account if somebody comes voluntarily. We have to be sympathetic to their case and help them to pay their taxes. Okay. So having said this, I think that your question is a very good one. In economic difficulties, it's true that we have to tax those who have more benefits. So some people may say that the abolition of solidarity levy goes against that spirit, but I would say that if you have a good progressive tax system, you will achieve this. And also the solidarity levy system that was designed in Mauritius was not a good system. It created a lot of problems, a lot of difficulties, especially for the middle income group. Because those who were earning, let's say they have a chargeable income of more than 3 million, they were paying taxes at 15% on their chargeable income, and then again 25% on the excess, the part exceeding the 3 million. And there was a cap, but the cap was not working for those having chargeable income up to 5.5 million. So they were paying up to 40%. I think Nicolas did hint on alluded to this. And this was not encouraging for the skilled workers, skilled professional, and this was one of the reasons why Mauritius also, I think the abolition of the solidarity levy has been most welcome. And also there was another problem, which was on dividend, because the solidarity levy applied to dividend. And you know that a company is being taxed on its profit before distribution, and then you tax those in receipt of dividend again, so it was a double economic taxation. And here also there was, we don't tax dividend from resident companies. But there was no level playing field among the shareholders. If you are non-resident shareholders, you don't pay solidarity levy, and those who are resident, they pay tax on the dividend, which was unfair. So now, with the abolition of the solidarity levy, it puts every shareholder on the same level playing field. I think that this is a very good decision to do away with the solidarity levy, in the sense that it corrects certain anomalies, and also it creates, we were talking about competitiveness of Mauritius. I think that Mauritius, to be able to remain competitive, we need to have a simple system of taxation. I think that Mauritius is competitive. Samade did respond to your question. But in terms of taxation, Mauritius is still very attractive in the sense that we have now a simple system. Also, I mentioned about we could have had a progressive system with less tax burden, very more simpler than this. And then we don't have capital gains tax. We don't have inheritance tax. We have a lot of advantages which make Mauritius to be competitive. Thank you, Mark.
Great. Thank you. Thank you so much, Mario. All right, so now we've come to our curated Q&A session. And I have the questions here in front of me. Who's got the mic? Let's go, Samade. This question is for you. What is the effective date for the increase in partial exemption from 80% to 95% on interest earned by a CIS?
The effective date is as from 1st of July 2023. So
Okay.
any fund that is receiving income as from this date will be eligible, but there are certain conditions attached to it. It's not a flat a partial exemption. The condition, or you need to meet a substance criteria, as has been the case with the other partial exemption regime currently in place.
All right, fantastic. Mahmad, this next one is for you. Can you please advise whether any consideration will be given to taxpayers wishing to join the scheme and make voluntary disclosures with outstanding tax amounts based on returns submitted before the 2nd of June 2023 for past years, but only assessed by the MRA after the 2nd of June 2023?
Yeah. For the return that have been submitted before 2nd of June 2023, the tax liability in accordance with the return that have been submitted are eligible to join the scheme, right? Because the returns have got their amount of tax declared in that, and by right, they can join the scheme, right? But for the assessments that were issued after the 2nd of June, they cannot join the scheme, but as Mario suggested, they may make representations when the assessments have been issued. If the taxpayer makes his representation and is willing to come to a settlement for the payment of the outstanding tax, he may make his case and will, of course, consider this is the way we have been operating up to now, on a case-by-case basis, right?
All right, great. Nicolas, let's pass on to you. What are the measures and incentives related to real estate investment available to foreigners? What are the measures and incentives related to real estate investment available to foreigners?
There are quite a few of them. And as you know, we have the Non-Citizen Property Restriction Act, which was quite restrictive in the past. But now, in addition to the programs such as PDS and all that, foreigners are now allowed to purchase properties in ground plus 2 buildings, etc. And there are also some of the schemes that have been put in place to in favor of professionals in emerging sectors. So there are quite a few of them, but I would be happy to discuss that with the person afterwards.
Okay, great. All right, thank you. Let's go Samade and Mario. You can both answer this if you'd like. With the new progressive income tax system and abolition of the solidarity levy, people will have more money to spend. Does this have any impact on inflation?
Look, I think this is a very good question. But if you look at the disposable income in the hand of the person paying the tax, obviously no one is going to be worse off with a new progressive system that has been put in place compared to previously. And the good thing is those who are going to have more disposable income will be mostly people at the lower end, because the starting tax rate of 2% is start for income above 390,000 rupees, which is good because helping people at the lower end to have, especially with the inflation rate we've seen, the high cost whenever you go to the supermarket, is going to help those at the bottom. And I doubt it's going to have any major impact per se on the inflation.
Okay. All right, thank you. Mario, how is the enforcement regarding regulations that look to fight tax evasion in the financial sector, such as CRS and FATCA? I don't know if I read that right. How is the enforcement regarding regulations that look to fight tax evasion in the financial sector, such as CRS and FATCA? Is it bringing additional revenues to Mauritius?
You know, it's a very good question. Normally, when you have exchange of information, you receive information from abroad about, let's say, our taxpayers resident, that they have income or they have assets overseas. Definitely, it may help the compliance. It will act as a deterrent because people know that the MRA has got the information, so they will try not to hide this information. The only thing is that we have a system for individual, which South Africa has made a lot of money from receiving information on CRS, Common Reporting System, because their system is different. For us to be able to tax somebody who has income overseas, normally they are taxed on remittance basis. So if they have received interest or dividend abroad, which have not remitted to Mauritius, we can't tax them. But for these information are important for MRA to, in fact, assess their income. They may have got income derived from Mauritius which have not been declared, or, as I said, it acts as a good deterrent to, if people know that MRA has got such information, they won't hide such information.
All right, well, that's straightforward. The last question for Mahmad. Is there any clarity as to whether the e-invoicing applies to banks? In practice, no invoice is issued for pure banking services, but would banks be required to adopt this for any other invoice that is not purely banking activity related? An example would be for intercompany recharges / management fees or the like.
In fact, up to now, I can say no, because it's not practical for banks to join the e-invoicing system the way it is now. Yeah. But then this doesn't mean that the system won't be enhanced, won't improve, because every system will put in practice and do the things that can be easily done at the very start, at the beginning. Then it will be extended to other operators. We talked about VAT registered persons, and the system has been designed in such a way that it may also apply to non-VAT registered persons, because they also may join the system, and the system would work in the same manner. The banks as well will be able to join the system, but for the immediately now, probably no, but it may come afterwards. But there is a study, an analysis that has to be done, and to see how banks can join in the system.
Fantastic.
Yeah.
Thank you very much. All right. Well, that brings us to the end. So thank you so much for joining us today. And a special thank you to our panelists for your expertise in this discussion. If you want to stay up to date with all the relevant information regarding this topic, then please subscribe to our YouTube channel, or you can go and follow us on all the relevant social media platforms. My name is Mark Morell. That is a wrap on Webinar Wednesday. We'll see you again soon.